It's Friday, February 18th, and you're watching the Daily Market Comment by Mario Sajikiriakos. I'm Christina Marujos, and thank you for joining us at XM.com. A series of reports about shelling attacks between the Ukrainian army and Russian-backed separatists injected another dose of uncertainty into global markets. Equities suffered the most damage, with the tech-packed Nasdaq losing almost 3% as traders unloaded riskier assets. By contrast, safe havens came back in vogue. Gold prices took to the skies, propelled higher by demand for protection against geopolitical accidents and the pullback in real treasury yields, as investors also took shelter in bonds. Similarly, the retreat in yields served as a shot in the arm for the yen. But besides the yen, the rest of the FX market was surprisingly calm. The dollar could not capitalize at all on all the geopolitical distress and was even outgunned by risk-sensitive currencies like the New Zealand dollar. Even the euro did not get hit as hard as one would imagine, with brewing trouble in Europe's backyard and stock markets sinking. On the bright side, the mood has improved on Friday following reports that the top diplomats of America and Russia will meet next week to try and resolve the situation peacefully. This meeting was interpreted as a sign that war might not be imminent after all, which gave some brave traders the green light to buy another dip. The problem is that diplomatic efforts have failed so far, and that's unlikely to change until there's a compromise on the table that saves face for both sides. For the markets, the problem is that Monday is a public holiday in America, and therefore many traders might prefer to slash their risk exposure and deleverage further heading into the long weekend. Hence, the relief from the diplomatic news might not last very long. Oil prices are headed for a substantial weekly loss as the prospect of Iranian supply hitting the market soon has overpowered fears around Ukraine. The latest reports suggest the new Iran agreement has already been drafted and includes several steps that have to be implemented before the sanctions are lifted. Admittedly, it is quite encouraging that oil prices haven't gone into free fall on the news. As for today, we will hear from the Fed's number 2 and number 3 most important officials, Lael Brainard and John Williams. Markets are still pricing in a decent chance for a shock and awe 50 basis points move in March. How this pricing evolves in the coming weeks could be the most important driver for the dollar, along with geopolitics, of course. This was the Daily Market Comment here at XM.com. Have a great weekend.